investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman, first day of this new week after the July 4th long weekend. And we're looking at the S&P. The E-mini is down 78 to 37.49. This exact phase right now going into about 10:15. We're at 10:06 in the morning. This is where you want to see some attempt at a movement to the upside. I'm showing the 10-minute chart that we were looking at the other day. How important was remember I said a peak D, that was on the first, that was on Friday. We were attempting to go to a peak D, at least a leg D, and then a peak D in the fourth highest peak in the Chapman methodology in the 10-minute E-mini chart. Well, it actually did that at the end of the day, and then it pulled back quite sharply. And as the market opened on the 4th, you see how important this 200-period moving average is. It went peak A, B, C, D, E, pulls back, tests it again with a slightly higher high. And then it really screams to peak F, pulls back, and then has like almost a right arm extension where it goes to this unusual G right here at the 7th highest peak at 1970. That's 10 past 7 last night. And it starts pulling back, double tops. And then the left side, right side price time match says, whoa, it didn't quite make that previous high, but look how weak the technicals are. And then it cascades. Earlier this morning, about 5 o'clock, it hits 3,800, tries to rally to about the 3,810 level, makes a dreaded H pattern, and now we're making lower lows again. So as I put this together, it says a couple of things. One is that the selectivity is absolutely imperative. That's what I've been saying to subscribers. We actually still back in a very strong cash position. Yes, I'm looking at stuff, and I discussed this on Friday, and I discussed it in my Saturday. I did it Friday night, but I sent it out Saturday. Market overview for the coming week. And I said, we got to be very careful. I do want to be buying. I'm going to buy one of the indices, or an ETF that kind of represents the indices. But I am also going to try for the single-digit stocks. So I like to do this for my subscribers. I like to have a variety of price points. Could be triple digits, could be single digits. So within that context, I did choose a single-digit stock that it's in an area that I think is, I cannot say recession-proof in the sense that everything becomes recessionary if you're really starting to see general market weakness. But it's in an area that says the people that are interested in this kind of product are prepared to pay more, and that's all I was looking for. So we entered into a stock this morning in the $8 area. It's actually doing very nicely now. 817 was the entry point. It's now at 846. That's kind of all you can ask for. The day is not even 40 minutes long, and anything can happen. But I'm trying to find areas, stocks. I'm just trying to find under the radar positions, and sometimes directly into the radar, as we've done in one position, a new position today, because I have to look at this as if to say, when I didn't have that much time over the weekend. I was away every day. But what I have been looking at for the past week is what the oversold conditions that we've seen are actually very, very, still very oversold, even with that sudden spike on Friday. That doesn't mean to say that in a bear market you don't go to lower lows, even regardless of what the oversold conditions are saying. You can get more oversold. But at the same time, there is opportunity for shorter-term positions, and those shorter-term positions can have very nice percentage gains if they work. That's all I'm looking for. What more can you ask for in this particular environment? So big cash position for subscribers to my opening call. Very select moves and we try to get in, and we raise stops, and if it gets stopped out, hey, that's the way it is. And then we try to get back in. And as I said, I think that this going into this 10-15 period, I think I said that on Friday, was very important. That was very important on Friday. I think it's important now. Now the S&P is down to just 67 at 37.59. The low was 37.44. Not a big deal, 16 points off the low. But I do like this candle, and you can see in the 1 minute chart that I'm showing right here, it's just gone to an L, which means long. It means that the 9 period is attempting. It hasn't. It's a 1 minute chart. I've got to wait for the minute to finish, but it is attempting to go long again. If at any point in the next hour and a half, we're at 10, what are we exactly? 10:11 a.m. Eastern time on the 5th of July. If at any point there's even a touch of the 200 period moving average of 37.80, anytime today, especially in the next hour and a half, 2 hours. That is going to say there are fund managers out there that are starting to look at potential moves to the upside. Yes, in the automated Chapman wave notation, 37.45 was a support level. We went to 37.44, and now 37.66 is the 2-minute automated Chapman wave resistance. That's the next level on the 2-minute chart, remember. All right. Now let's get back to our story, and we want to run through these things. Here we go. Let's go to INDU. This is the Dow, down 569, made a low this morning of 30,446. So far, that's the low. It's 446. Oh, it's 60 points off that. It doesn't look great, but it's a start. And the MACD is not great, but it's good. And the stochastic's not good. It's kind of weak, but it is rallying. And the on-balance volume is the clue here that you need a lot more buying pressure to get that on-balance volume to really start kicking to the upside. And the 9 period is still way under the 14. We hit it this morning, 30,899. It went just above that. That's the automated, let's say that's called the pink 9 period exponential moving average. And then you go to all the way to right there. Let's go to that. I just want to give you parameters. 31,013. So I do like it. I'm busy doing the show right now. I probably would have grabbed a long position at about 37.56, 57, and just try to raise the stop and just let it run in the E-mini. Now we're looking at the S&P. And the S&P is down 63 at 37.62. This is the cash. That's not a great pattern right there. You know, my 136 rule. Now we're into bar 4. So we've missed the 1. We missed the 3. That means the consolidation lost only 1 day or 3 days. Now we're into the 4th day. I don't like that. It means that if you hold longer in a sideways pattern, you actually have to generate a brand new technical buy signal to push to the upside, even to take out the 39.45.86 high of 5 sessions ago to start. Well, it could be a leg B if it's direct from here, but you've already got a peak A, a leg A that might be lower down from Friday. So that's it. There will be changes in area. Now they're down 269. The little green candle is actually much better than IWM. But just trying to come back down. I'll be back to the top screen to the upside.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, I had a question about ZM. Could I post ZM? That's Zoom, Zoom video communications, video conferencing. Yeah, very nice move today, up 4%, up $4.51 at 115.49. And that's the reason why this is an area that I'm intrigued with. I had two choices today. I chose one. It's nicely off the low that we got, but I probably should have gone back into the other one that we had, which is really even nicer. So, and that would include Zoom. I think it would include RBLX. Is that RBLX? Is that? No. Have I just moved into the wrong area? Let me just do that. Oh, I wrote it in the wrong place. RBLX, RBLX. Oh, nice move. This is a peak A, peak A, B, C. Let me do this live because we always have so many new people. So in the Chapman Wave methodology, you try to identify the lowest bar and then merely count each successively high peak. Your obligation is to count. Once you've established the low, every single peak counts. So this is a peak A. Then it pulls back, makes another A, makes a lower A. But it makes an even lower A, and that A goes to peak A, B, and C. Then it pulls back even deeper, but it hasn't taken out the 22.61 start. It goes to about 24. And that says, okay, you got to count the next peak, and that becomes D, E. Now, the big question is going to be, is this an F or is it a brand new A? Is it an old count, just counting alphabetically in sequence? It can go up to G, never an H, but up to G. Then you have to see whether there's an alternate count. Well, I'm calling this F for now, but there are signs that it could become an A. On the on-balance volume is pretty good, but it's pulled back from the overbought level recently. Stochastics at 76%. I prefer over 80%. MACD is very strong on the daily. The 90 is way above the 14. I've got a feeling that this is going to turn into, I don't want to make it too complicated. We've just started the week, into a potential Chapman wave unconventional flat-based restart. What it means is, don't make it complicated. Those of you who've done my webinars, etc., understand very well what I'm talking about. But most importantly, what I am looking at is that this could recycle. That becomes an E/A, even though that was lower. That's a big hint in this particular methodology, Chapman wave flat base, unconventional flat base restart, that it can go higher. Keep pulling back towards the 35 area. It is the 37.85. This is Roblox Corporation gaming platform, game creation system. When it was over there at 141.60, somewhere in there, I had it notate. I wonder if I've still got it. Let me just check. Or did I lose that? Yeah, when it was somewhere over here, I remember Kramer interviewing the CEO, and he was just saying, this is, we are in everything. There isn't a platform that doesn't need us. We are in everything that's needed. It isn't just gaming. It's our technology is so vibrant. It is so in demand, blah, 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 blah. Anyway, it happens to go from the 141.60, let's call it 137 area, makes a little bit of a dip, and it goes down to 22.61. And that's what we're talking about. From now here, it's made an H pattern successful so far. This is another phase, and it's gone above the 50-period moving average. So I've got a feeling that this is going to be very choppy, but moving to the upside, higher highs and higher lows for the moment, and then it'll keep coming back. And at some point, it makes an alternate count that goes to G/C. It doesn't go much higher than that. And then it comes down a lot deeper, and it tests the 32 level before it possibly starts another big buy mode. So at this particular level at 37.83, on the day, I think this is nice, as is really good action. On the week, it's nice. It's the third time it's testing the 14-period exponential moving average. It's going to have to go to 43.80 to 44.50 before the pink 9-period moving average in the weekly chart can actually cross positive. But very nice action so far today. It's just so far today. All right. So let's go to another one, DDD. Also, I believe Kathy Wood, at least one of the positions she has, I don't know what the position is at this particular point, it's gone to a peak AB. It's at a C. The last C failed, and now it's got a Chapman wave. Lowercase h to a lowercase m formation, has not taken out the 879 low of the 12th of May. That's a good sign that says it could be stuck in a range for a little while longer. Then you must not see a break under 817. Preferably, you want to see a close over all the arches on the left side, so that if it can get to $11.80 or $12.10, that is a big deal, and it means that it is free from the drag of the single digits, and it could actually move a little bit further into the upside, and that's the 3D systems. At this point, it's just looking okay. All right, so that was a question there. CRDF. Oh, look at that. What a nice move. This is called Cardiff Oncology. So for the last 5 weeks, but especially for the last couple of weeks, I've been pointing out that, I wonder if I've got it here. I have a whole list of these biotechs, the very, very small single-digit biotechs that have been absolutely superb winners. They're going from very low lows to, let me just do that, make sure I've got it right. D, that's an A, gray A, and then an E/B, and then an F/C, but everything about it thus far says just stay with the F, stay with the lettering right now. If it gets to a G, it could be a G/C, and then you can talk about it as an alternate count. So far, 262 up 30 cents, up to almost 13% on CRDF. I called it Cardiff Oncology Inc. Yeah, we had one that I kept focusing on, ATRA, and did not get into it. It's also wow, where did it go? ATRA. Whoa, look at that day. We could have had that. Atara Biotherapeutics Inc. Just there are so many of these small caps. So once it's in the sector that is doing so well, your question about, oops, where did it go to? Can you look? Yes, CKP, we're going to get to bonds in a moment. And running nicely. What was the question? I've forgotten where it was. I have to try to find what we CRDF. I did write it down, didn't I? No, I didn't. Yes, I did. So CRDF, the question was, what about, where can it go? And at this particular point, I always look at the left side. It's just an easy thing to do. Why make? You don't have to use Fibonacci. You don't have to use Chapman wave. You don't have to use nothing other than look at the left and see where the most obvious left side high was of consequence. On the week of the 8th of April 2022, it did 277 and then plummeted down to the low of $1.18 or some dollar. What was that? $1.13. So here it is on a weekly going to a leg. Oh my goodness, this is a leg D already in the weekly. And my left side target would be 277. Today's high is 264. It's just an eye blink away from trying to get there. My suspicion, and it's only a suspicion at this particular point, is that it's forming a tremendous space between 220 and 180. I'd like to say $2, but I'm going to say 180 just for the moment. 186. And if CRDF holds by the end of that, look how it always gives it back. And there's a big spike like this. If this actually holds, it goes 264 higher. This is really good back. I'll be back to finish this. Oh, down 622.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Well, just real quickly, I want you to say Cardiff Oncology is actually going a little higher as we've been speaking. Now it's the 267. So, yes, as I said, a lot of oncology, biotechs, especially in, it wasn't just oncology, that's cancer, it was in many other areas. But I'm kind of fascinated by the group move, and that to me is very important. When you can get a group move, it means that you've got a story there that is being followed very intently. And I like that because it gives you a little bit of a cushion. A couple of things that I also want you to look at now. Let me continue here. So the dollar screaming to the upside in leg D. I've got it as an alternate count. It was a G/C at 105.79. I'm just continuing that as a D. It could, in fact, be a brand new C, but in the Chapman methodology, to do your best, you do the best you can to go sequentially, and then you have to look at the alternate counts. But most importantly, if the technicals are strong, it gives you a little time in which to say, well, let's see how it unfolds, but at least it's giving you a guideline to say that this particular breakout here, look at the monthly chart. This is a multi-year high. Look at this, the beautiful cup formation, one cup, second cup. I drew it in over here. It's done that a few times. It did that over there, broke out to a leg D, just as we're doing right now, potential. This is in the monthly chart. It's a leg C, and it has a potential to go to a D. And the MACD in the monthly chart is great, but the stochastic flat at 89%, that's what I look for. I love that. That's what the textbook, I don't know if you can even find a textbook that talks about saying, I love having a stock that's holding above 80%, especially getting to 90% or more, because if it's flat and it's holding, it means it's in a buy mode and it's going to stay there for a while. When it starts to turn down, when it breaks and goes back under 80%, like it did over here back in 2020, December, going into the beginning of 2020, look what happened. It went from 102.99 leg E, peak E, whoop, right down, took out the left side, long leg of doji low, and it went down to 89.21. Here we are at 106.51. We've been long since 90 via the UUP. And since 2018, so we sat through a couple of big turns, but I've been very favorable towards the dollar for, as you can tell, for quite some time. Now, we had a call on, was it? I'll look at the stock and I'll be able to tell. Yeah, I think it was on Friday. Yes, that's right. Brent called. We were looking at this stock, Clovis Technology, Clovis Oncology, that is, and it was in the it was somewhere over there. Look, they've got written peak C. I remember it being just over the 200 period moving average. I said, that is a good sign. If it can close sharply above the 200 period moving average, it means it's, for the first time, it's closing at the high of a big green candle, and that big green candle is still only a leg C. So what did it do? It pulled back today at the opening, opens at 270, goes down to 244, and here is at 252, and this could become a peak C, but this suggests that it doesn't have to, because biotech stocks have a mind of their own. But I think this will go to a leg D, and if it's today, if it goes above 290, the high of Friday, by 1 penny, or if it touches 290, this still remains leg C. It means that you still get a pullback and you should go to a leg D. If it closes below 290 today, it means maybe sometime this week we pop up and try to touch 3, and then maybe it takes a deeper consolidation in time, maybe even in points. So far it's acting extremely well. Next question I had was, could I look at bonds? So let's do this. Let's go to the TLT. The TLT is in leg C. It'll be a peak C if there's no new high above Friday's high. This is the first time in quite a while that the MACD has been this strong. It's been good before when it went to that peak D. Look, there was a full peak A, peak B, peak C, peak D, the fourth highest peak in the Chapman methodology. That's your objective in a buy signal upgraded to a buy mode. However, it can continue higher, but D is where other things can happen. It can have the sharpest pullback. Oh, did it have the sharpest pullback? Well, you can tell me. From 119 in the TLT, that's the iShares Treasury 20-year Treasury bond ETF, from 119.74, it pulls back a little bit to 108.12. I would call that a pretty serious pullback. The dreaded H pattern. What's the dreaded H pattern? Let me do this. So if you sign up for my newsletter, you also get, I don't know if I can get that right now. Yes, I can. You also get, if you sign up for my newsletter, you get all my videos that I've done so far. I've been asked a couple of times now if I would do another one of those all-day sessions where I just put all these techniques together and we follow something like, in this case, we could follow anything, but sometimes we just, because we want to have something that's been moving as much as possible, so sometimes we'll follow the E-mini, but we could choose anything that people want to particularly follow. Look, this has gone to peak A, peak B, and now it's gone sideways. And underneath it, it's got a peak A and a B. If it breaks out sharply above, and a C, if it breaks out sharply above this high that was made at 1033, 3764.75, in this particular phase right now, that becomes a leg D. The higher the leg D goes, the stronger it'll become, because if it just goes D and then pops back down, it says you're stuck in a rectangle formation, and this is what I would normally draw right here. We're in a rectangle formation. So far, the technicals are starting. I see buying potential here. There are a lot of fund managers that are saying, I like what I'm seeing. I know that the market keeps coming down. I know this is a bear phase, etc. But trading-wise, I see potential. So look how strong this leg is. Really nice. And if it can go to, it's at 37.69 right now. If it can go to 37.73.5, there's a good chance it starts for the first time to touch the 200-period moving average since it got repelled at that peak B minus, peak F, and then a sideways action in a peak B minus back at 6:50 this morning. And then you didn't even need the 200-period moving average. And not only that, look how pink. The pink was negative, brief green, pink, brief green, pink, brief green, pink, and it stayed pink until it went sideways again, and then it plunged to a low. And now we have to wait for another pink. And the pink has turned around. It's been pink now, meaning green long, from 12:10 this morning. Remember I said the 10 o'clock to 10:15 period is going to be extremely important, just like Friday. I think there are repercussions here. I think that the selling is much more emotional than constructive, and I think it probably is more destructive than constructive. I don't say everything's a buy. I'm just saying I think there's a greater chance now that we're trying to form some kind of a week of July the 7th low, July the 5th low, that at least we can trade to the upside in. So that's the story there. As I say, when I do the live shows, I discuss everything. I discuss how important. Did I discuss it just a moment ago? The 200-period moving average. Did I say that if it can get above a certain level, it'll touch the 37.75 200-period moving average? Whoa, we just touched the 37.76 right now. Going up. First floor. Menswear. Okay, this is the way it is. So let's go on. We're going to go to, so we're looking at the TLT. I need to do this. So let me just show you something as important. If you go to the TBT made a PT. Remember how important PT is? Look at that PT. Look at this PT at 29.56 on the 6.2. Look how far up. Oh, that was the thing I didn't say. A good point for the buyer. That was very unconscious chart on CRDF.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so because I'm going to go and look at crude oil right now, a couple of people have asked me, can I look at some of the oil stocks, whether it's it could be drillers, it doesn't matter what it is. They all kind of have the same pattern at this particular point. So I drew this in. This is Occidental Petroleum, OXY is a symbol, down 253 at 57.90. Oh, I'm just about to burst out crying because the average price for Warren Buffett is $58.91. He's down $1, but it does mean that he is down 500, how many shares? 9,887,000. So he's down, oh, shame, 9,887,000 at this particular point on that particular thing on average. But this is the importance. Look at that matching. I love time sequences. Now, I'm hoping Larry's going to be able to do his show today. Gosh, we've missed him. We'll see what happens. I know that he had COVID and he was his voice was really bad. But we'll see. Most importantly, what we're looking at is there was a time sequence between the monthly chart, the high of, right there, the high of 105.64, June of 2014. 105.64, what did I say, June 2014. Is it 15? Yeah, 14. That was the high. And then it made this kind of cup formation with a lower low and then a lower high. And that came in right there with two doji candles. I love these doji candles. That was at a peak A, B, and a peak C. And then it failed. It didn't go to a D, but it failed right there in June again, June 2018 at 87.67. So we've got 87.67, and that's June of 2018. And that's another failure pattern. Well, lo and behold, dare I say it, we went to, it wasn't June, it went to the monthly chart, goes to May, a month early, and that is May of 2022. The high is 74.04. So let's just put that in. I'm making this in a very light 74.04, and we said it was May 5, 2021. And I have to make it, because it's not important right now, it's a monthly chart. It's just a point of note for me. So I'm making just about as faint as I can, just to have it as a reference point, because the lower lows and lower highs said, wow, you went from 105.65 down to the 56-ish area, went to 87 in June And then you plunge June 2018 to a low of with a doji. These doji candles. I only have a handful of candles that I consider to be really important. And one is at lows, potential lows and highs. Look for these tiny doji candles because that says uncertainty, and therefore you can get a change of trend. Maybe a continuation, but you also get a change of trend. Well, it did go down to 852 in October of 2020. I would say 852, almost that's 900% higher to 74.04 in May of this year. Says, you know what? Regardless of what's going on, Ukraine, etc., and Russia, this chart says that there is a potential. It's only a potential. It doesn't say it's going to happen. The stochastic's still at 81%. We've only just begun the month of July, but it is pulling back, and the MACD is still very strong. The 9 is way above the 14. So it just says this is a period that you can have some consolidation. Now let's go to the fact that Warren Buffett has, and Warren Buffett, if you look at the BRK.B shares, this is the Berkshire Hathaway shares, look at that high that was made right there. That was in March, I think. Yeah, March at 362.10. Let's just type that in. 362.10, and that was 3/20/22. And once again, I have to make this very light because we haven't really got a confirmation. It's only 1 month under the 14-period moving average, and the 9 is still way above the 14. So I'm just saying, I'm keeping my eye on this because this is the guy that doesn't just buy paper. He owns companies. Warren Buffett is the all-American entrepreneur that really has for a long time put his money where his mouth is. And yes, he has a lot of paper, but he buys the companies. He has a huge part of the companies. It's not like he's just trading in and out. So in that particular context, look, he's saying that we are probably in some form of a recession because from 362 down to the low today, well, just as we're talking, it's at 271. It's almost 100, but it's almost like 28%, right? And this is Warren Buffett, Berkshire Hathaway holding. So I've got a lot of respect for that. I say the weekly chart is in a sell mode. The daily chart has been in sell mode for ages. There was a dreaded H pattern. Remember the lowercase h that fails? Let me just do this one more time. Yeah. So I have 3 specific patterns I look at all the time: straight line up, straight line down, cup formation, arch formation, and then a mix of 1 and 2 or 1 and 3. In this case, it's 1 and 3. It's the dreaded H and kept taking out. Look, even here on the daily, it took out the left side low and plunged. And here it's attempting to hold in the H pattern. I call it the dreaded H because if you take out the left side low, there's a big problem on the right. It's the Y, the green Y pattern. If it takes out the left side high in this cup formation, that's usually very positive. So we're watching this, and this is the Eiffel Tower. Straight up, straight down, uppercase A pattern. Let me just type that in right there. So we're looking at this, make it nice and big, make it right there, 48, pica or font, and style is red. And lo and behold, look what we've got. Eiffel Tower, straight up, straight down, took out the left side low, did it in a left side, right side price time match. Look at this. If you go from here to the midpoint, or right there at that peak G, we've come down in a quicker time frame than going up. That's really important. That's saying there is a lot of weakness. So that just says to me, be very careful. There's no need to get too carried away on the long side. And the short side now is becoming so much more specific. It's getting a little harder. And there it is, Eiffel Tower. What do? I usually type in here, Eiffel Tower. I have not seen the Eiffel Tower in a long time. Time to get back to Paris and have a very beautiful city. Uppercase A formation, straight up and straight down. All right. So that's what we're looking at from the 360 area, 362 it was, and here we are at 272. So that's usually not a good sign, but it does say at this particular point you might see some choppiness. So that leads me to the next question that I was asked Friday, but I never had a chance to get to. I only mentioned it briefly, was that the S&P Financial Spider Fund, the XLF, is acting very poorly. I don't like when it does that. I don't like when the financials are moving down. and yields are going higher, even if in the short term we might see a little pop in the bonds so that yields can come down. I just don't like this pattern at all. And that's the same to me. In the larger context, you don't want to be too aggressive to the long side. Probably the most important thing is you get one of the indices that's short and you just stay there, even with pop-ups. You make lower lows and lower highs. But in the meantime, put that together with the SMHs, which today, even today, they're down to 73. Making a lower low in the dreaded 8 pattern right there. Look at that. I'll be back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, I was asked whether or not I had any special Chapman Wave chin reading, and that is my chin gauge. It's really not my chin gauge. It is right there. It is my Richard Arms index, and basically it looks at the highs and the lows subtracted from the highs and the lows, up volume and down volume, I believe. I don't use that at all. What I look at is just the numbers. Certain numbers, I say if it's lower than a certain number, then there's a really good chance that you're going to have a Dow opening weakness the very following session. And if it's very high, it says there's a really good chance that within 2 sessions you can have a very sharp S&P move that's going to impact the cash indexes. and just basically on the S&P. So we've had a reading of 3.66 already today. That's very high. And that just says, yeah, you could keep having these bounces, but that doesn't mean to say it can't fail. Look at how important this 200-period moving average is. We discussed this live. I said, if we go above 37.70, 250, I think I said, there's a good chance we're going to hit the 200-period moving average, and we did that. We hit it 1, 2, 3, 4, 5 times, and then you pull back very sharply. That's the importance of all these different indicators. You don't need them until you need them. Okay, just before we wrap up, and I'm just waiting to find out, I don't know yet, about Larry. Larry is back today. Wonderful. We've been waiting for Larry to return. I know he had COVID. I know he was not well, and we all appreciate that he's come back. It's not easy after being ill like this. So we're looking forward to it. So I'm going to be doing the news, and then we're going to hand you over to Larry, and great programming for the rest of the day. Don't forget, Tommy Jr. starts us off at 9. Don't forget that we also have a wonderful, this is the end of the Tiger sale. I mean, you're looking for a bargain in the market. You've got a bargain. I mean, how much more? 20% more. Anyway, you've got great bargains going on. We want to see by the end of the day, Dow's down 701. I'd like to see 480 minus 400, 180 minus 270 by day's end. I don't want this to accelerate. Have a wonderful day. See you tomorrow.